big hello and a very warm welcome to Brand Equity with me, Sonali Krishna. Today with me, I have a very special guest. He is at the helm of a company that has just been awarded the Corporate Citizen of the Year, and that is no mean feat. Well, I'm talking about none other than Saugata Gupta, a man who's also continuing to be at the helm for the next 2 years. So many congratulations on your extension for the next 2 years, and hopefully we'll continue to see you a lot more than 2 years. But great going so far. I think you must be breathing a sigh of relief with the Q4 results. Not just you, but the industry at large. Finally, after 6 quarters, there's been some relief. There is some positivity and optimism in the mood and the market. How are you reading this, and are you looking at this cautiously, or are you looking at this optimistically?
So the way we see it, we were just coming out of COVID. COVID started sometime in March 20 when the Ukraine thing happened. That led to two issues. One was very high food inflation.
Yeah.
And of course, our input costs, which were then passed on to the consumers, or we had to absorb some of them in the form of margins.
Sure.
Now, what happens in FMCG is that whenever there is high food inflation, especially at the bottom of pyramid and rural, urban and bottom of pyramid and rural, people then tend to titrate or downtrade in FMCG.
Right.
Because food is something people can't compromise
Absolutely.
on. Number two, what happens is that sometimes in order to maintain price points, we have undergone shrinkflation. Now, normally when shrinkflation happens, people think that, okay, I've reduced the grammage or the MLH, people will increase the number of transactions. In reality, it doesn't happen.
Okay.
And therefore, people then fix the outlay, and therefore they titrate consumption again. And as a result, we have had, especially in rural, 3 to 4 quarters of decline, especially in some of the mass categories.
Sure.
I think the worst is over. And I believe that this year will be a better year for the industry than last year, definitely.
Yeah, so I just want to take that, a little bit ahead when you say the worst is over, and, we're sitting in May, so you have some sense of, this quarter and how it's faring. Why is it that, for instance, the April data that has come out, in terms of just FMCG sales, why is it showing that only home care as a category has reported growth? And there is attribution, and you will be the best person to tell me that there is attribution for the sector per se, in terms of the fact that there was lower stocking by kiranas, especially in April because of dumping of inventory in March, and hence we are seeing that kind of low stocking. Is this something that you're concerned about? Is it a one-off? Does it happen every year?
You can't look at one quarter, but over an annual full year basis, I think this year in terms of volume growth for the industry will be certainly better. If you look at even the declines in rural, if you look at quarter 1, quarter 2, quarter 3, quarter 4, we have seen that progressively it has been coming down, the declines. And for the first time, after a long time,
Sure.
HPC has delivered some volume growth. Food, of course, the headroom for food growth is far more, and food has been doing well, and food is far more urban-centric packaged food than, the entire HPC. So I don't think that we should look at one point in it. It is giving you a directional trend, fine. But let us wait and see how the quarter pans out.
Then that is definitely the hope for all of us. But, if you just look around you today, be it as a leader or just, a citizen, average, lesser mortal citizen, you look around you and you see that, yes, while we are all stating that we're in a very good place, if you juxtapose India, in compared to the rest of the world, look at the global macroeconomic factors, and, the war and so on and so forth, we're in a better position. But as we have started this year, newspapers and media has been filled with layoffs, right? And this is not just, this is an urban phenomenon. We are seeing that in every day there are large companies laying off people. So clearly there is pressure for cost cutting. My question to you is, will the urban story, which has actually been performing better than the rural story, and now we are of course pinning our hopes on the rural story revival, are you seeing an impact on when you look at what's happening, do you see that the urban story might get a little impacted because of this?
So if you look at it, I think, and you are absolutely right, so compared to the rest of the world, I think we are in a far better place. India is also a market compared to a lot of other emerging economies where the domestic consumption is the big driver of growth. And I see no reason to ever suspect that there will be stress in domestic consumption. Coming to the layoffs again, there are some companies and a number of jobs, that is completely insignificant compared to what's happening some other parts of the world. Okay. Sure. Number two, I think the kind of the productivity linked incentive led manufacturing investment that is happening, it's going to create far more jobs, and therefore I am not at all concerned about this issue. I think what is more concerning could be if the monsoon doesn't play out. Yeah. But I am actually as I said, that India's story is very much intact as far as I am concerned.
Okay, that's great. In fact, you're saying that, okay, these are things that happen on a normal basis, so one should not take that seriously in terms of impacting consumption. It's been a quite a tough ride for all industries, because with 2020 COVID, then recovery, then the global factors, all of that, and now of course we're hoping that things stabilize. You've yourself talked about the fact that there has been a tremendous shift in consumer behavior because of what we've all gone through as humanity. My question to you is now, as things normalize, and with WHO finally giving us, a green signal saying we can put COVID behind us, the fear psychosis really coming down, are you seeing those behavior patterns sticking, or are we going back to what we have lived until 2020 hit us?
I think in some cases it's a return, but one or two structural shifts have happened. One in terms of, I think, adoption of digital. I'm not necessarily saying e-commerce, but adoption of digital as a means for, making a choice, interaction with, I think the consumer today is far more comfortable in doing digital. I think that's a permanent change, I would say.
Okay.
And in the case of e-commerce or digital adoption, I think what would have happened in 5-6 years has got compressed in 2-3 years. So there has been a significant acceleration and there is not any reversal.
Sure.
The second thing I would say is that people are little more concerned about health. Because if you look at COVID, I think people who had a certain condition were far more vulnerable to, COVID. Yeah. And therefore there is, earlier days maybe a lot of people used to depend on destiny as far as health is concerned. I think far more conscious this one to health, and therefore healthy eating, a little bit of better, in a healthier way of living is something I would see. That doesn't mean that suddenly we will see an exponential growth in nutraceutical and functional foods, but at least healthier or better for you is something which is a trend we are seeing.
For instance, you also have these influencers who have suddenly also become very big, and while the sector was looking at, let's say, health foods or healthy for me foods as taking off, at least in urban India, there are now people like Rutuja Devekar who are very staunchly talking about going back to eating, how you did in the olden days, how your grandmothers and your grandfathers taught you. So there is a strong force also that, so don't get carried away with avocado, don't get carried away with quinoa, all of that is also happening, right? And there is also that change happening. So as Indians who love our food the way we are comfortable with, are we really being able to do that shift?
I think you are absolutely right.
Taste.
I think, firstly, you're right. The Indian consumer will not compromise taste for health, okay? And therefore, as you see in our food also, we are very clear that we have to deliver on taste. Number two, anything we offer, you have to offer an Indianized version. To give you an example, why has masala oats been successful and breakfast cereals as a category hasn't penetrated exactly in India? Is because we realize that this is a Western eating habit. Indians like it crunchy, Indians like it hot and not cold, they like it savory. You convert that into from a cold breakfast into a tastier yet healthier in between meals. The second big thing, people are talking about ghee, for example, and ghee is as good as an olive oil, okay. The third thing, I think millets, and that's one of our big drivers of our growth in the future. And millets is something which our forefathers and everybody had eaten, and that's good. So it's important that we don't forget that the Indian habits of the past, and you need not always adapt to something, because our metabolism, our bodies and everything is tuned to something which of the past, and therefore the adoption of the Indian way of living and Indian healthier way of life. So it's extremely important. In India, unless in food, if you don't massify it, and if you don't Indianize it, you don't get a scale.
Okay. I want to talk to you a little bit about what we've seen as a phenomenon, but of course, I'm not sure if it is sustainable, and that is quick commerce. So, do you see in India, while this was great during COVID and all of that, and our headspace was somewhere else, as we come back to reality and as we start doing personal accounting, do you see Indians taking on to quick commerce as it is projected? Or do you see this as a difficult space to crack in terms of just these players becoming more profitable? And also give me some insight about, like, if you have Marico's portfolio on these things, what is the offtake compared to, let's say, a modern trade versus a kirana, different distribution channels?
So I see quick commerce playing a role in a top up. It obviously you can't do your planned groceries unless you really run out of something. It's an emergency. It also delivers convenience, because at the end of the day, if you order from somewhere else, are you there at home to pick it up, or so it gives you that convenience. Obviously, certain categories do well, like for example foods, snacking, you need a soft drink or a juice. So there are certain categories that are much more prone to e-commerce. Even we are seeing, for example, and if you really look at it, lower AOV items especially of food is far better on quick commerce than to do on e-commerce sites, general e-commerce sites, because grocery is about large packs and all that. So I think it has a role to play. Now the question is on the profitability. I'm not the expert on profitability, but all I can say is that I think we need not compete to deliver in 10 minutes, 15 minutes. I'm sure the consumer can wait for half an hour. Yeah. If there is a cost value equation to that, it's fine. But I think it has a role to play. And see, India is such a big market, and I keep on telling people that anything is an and. For example, people predicting that GT will die because e-commerce modern trade is going. Indian kiranas, they are very smart. They are adapting themselves. They are transforming. So it's always an and not an or. And I think similarly, whether it's cash and carry, whether it's B2B, the only thing I would say in the overall organized retail, I don't think India will be very difficult for the extremely convenient stores, that chain convenience stores, because as I said, the Indian kirana is a very, very what I call very, very savvy this one. So even organized retail, I guess the large box format has a much better long term propensity to grow than a mid format kind of a thing, because India real estate is expensive. People cost is, sometimes you think it's not expensive, but actually it's relatively expensive. So the infrastructure is unique. So I think there are certain things will do well, certain things will not do well. But as far as quick commerce is concerned, when it's with the role of as a top up, role of impulse food, I think there's a role there.
When you're talking about this convenience store format, am I getting you right when I assume you're talking about the 7-Eleven type of?
Kind of a format. I'm just saying that if you look at it in a lot of developed markets or in Southeast Asia, they have completely replaced the pop and mom store. It's unlikely to happen in India at all.
Sure. Having said that, you did make a statement where you said recently that you feel general trade needs to perform a little better. What did you mean by that?
See what happened in the last few quarters, if you look at it, that since this general trade has declined in our case, and I think it's not doing that well in FMCG because of two reasons. One, in the urban they're getting squeezed a little bit because of e-commerce and modern trade, and the entire rural trade consumption goes through general trade, and that is why they have got impacted. There is no substitute for direct rural distribution, and it is going to be a long-term source of competitive advantage and an entry barrier. So organized players who have very large-scale rural distribution, who do direct distribution, will continue to enjoy. I think India is 50% is still a rural market. The entire activity or hyperactivity is happening perhaps in the top 10 towns, top 15 towns. And as you just go down, even in class 2, class 3 towns, you're not going to see that modern trade or e-commerce completely taking over. Each channel has a role. I think what is important for all the players is to identify the role. For example, I see modern trade and e-commerce as a driver of premiumization and driver of innovation. As I said, that India continues going to be an invest to grow market for 10 years, 20 years, 25 years. I think you have to partner with each channel so there is a win-win relationship.
Sure. One thing I observed as a customer, say I want to order a Marico product, but slightly bulk buy, right? If let's say I go on to, let's say, an Amazon Fresh, right, or Amazon Fresh, or a big basket, and I look at it and I order the same thing from my kirana, the kind of deep discounting I'm getting by an e-commerce player is far more attractive for me to go and buy it from there. My question to you is this deep discounting and hence seducing me to buy it from their platform, who is taking a hit on the pricing?
So let me tell you something. I think the way we look at it is that we try to ensure that there is what I call each channel has a SKU. So certain SKUs, for example, a slightly smaller SKU will be advantaged in a general trade.
Yeah.
Certain SKUs will be advantaged in the modern trade or an e-commerce. And that's how we want to do it. We, to a large extent, also operate differentiated SKUs. For example, some of our core brands, the SKUs that are available in modern trade and e-commerce are different from the SKUs that are available in general trade.
Of course.
So that we don't we operate a minimum operating price. We ensure that channel conflict is at a minimum. So therefore, I see that each channel has a role, and at the end of the day, obviously, each channel has a growth opportunity.
Okay, fair enough. And if I had to ask you, let's say, if I take a 2019 as a base and now juxtapose it, let's say, with 2023, in terms of, share from distribution channels, how is it performing for Marico?
So just to give a perspective, I think in the first 2 years, obviously, modern trade got more impacted than general trade during COVID because of the entire issue of excess, so I think and then modern trade has gone back to recover. So I would say that there has been a significant increase in e-commerce, but I think the momentum of growth in e-commerce is going to moderate, and some of the things are moving into back to modern trade.
Yeah.
And I think GT has been fairly resilient.
Yeah.
It's only the last few quarters because of the rural, which is an urban, I think it's been fairly resilient.
And in terms of, the difference in terms of the share contribution to you?
But that is because our shift has happened a little bit also because of our portfolio. If you see a significant growth in the last 2-3 years has happened in foods.
Yeah.
And to a large extent in digital brands. Now that growth obviously is a little more modern trade and e-commerce skew. But if I look at my core portfolio, has it changed? No. In fact, we are making a more conscious choice to ensure that our core portfolio is driven much more through GT and rural especially, because that is where the potential is. For example, our rural contribution is still, I think, slightly lower than some of our peer set. So ours is some 34%. Direct rural is
Sure. When you talk about digital brands, Saugata, what do you define as a digital brand? Like born on digital and will be sold on digital and marketed on digital?
I think the way we define a digital brand is that a significant portion of our sales happening on the digital platform, and essentially, and this is how we define, almost 80 to 90%, if not 100% of our even advertising is on digital.
100% is on digital?
Yeah, so look at digital brands.
Okay.
Now, when it makes a crossover and starts mass advertising, we call it digital first. For example, there's a brand like Live On and all, which has a skew towards digital or modern trade. They are skewed digital, they are not digital first brands, but are skewed towards digital.
Sure.
And then there are mass brands, which maybe 6-7% coming from, less than this one from digital.
So, how many digital brands do you have now?
So, we have 3 which are acquired. Beardo, which is now we own at 100% in the last 3 years. We have Just Herbs, we have True Elements, and we have our 2 own homegrown brands, which is Pure Sense and Coco Soul.
Okay. And it's a good example to understand, because one also talks about, like, how do you modify your marketing mix as we become a much more complicated landscape. And if you have like 5 digital brands that you are nurturing through the digital ecosystem, it will be interesting for me to understand from you how you actually see the investments in terms of awareness, advertising, publicity on digital, and sales. Are you seeing that kind of efficacy that the digital ecosystem is actually being able to deliver?
See, I think one good thing that has happened in the last 1 year, because there has been far more sanity in terms of funding. So therefore, the e-courses and the entire consumer, customer acquisition, the CACs have become reasonable. So I believe it's good, because what will happen is, in this now, good quality brands will, thrive.
Yeah, yeah.
And some of the brands which, I mean, there's no vanity in cash burn anymore. So I believe that, what do digital brands offer? I think digital brands offer, it's usually a founder with a lot of passion, an unmet need, huge agility, velocity of innovation, and lastly, significant digital marketing capabilities. Now, if you look at, and I'm talking of personal care, because food is slightly different.
Sure.
Food is very difficult to have digital brands because of the AOV and the gross margins. Okay. Now, at a 150 crore level, I think when you have an awareness, and therefore you start initially driving basic penetration, but far more cross-selling or retention of customers. So to give you an example, in one of our brands, the repeat average order value is more than 2x and the new customer average order value. So
Wow.
I think while customer acquisition is important, I think repeats and getting loyalty is extremely important for digital brand.
Yeah. But in terms of, let's see, when you say digital brand, right, the discovery of that brand, right, are you finding efficacy in the discovery of a digital brand via digital?
Yeah, absolutely.
Yeah.
I think it's, again, you have to have a fine balance between, investing behind performance marketing and building brand equity. I think what happens is, a lot of brands where people have a desperate urge, building to sell, then they get into discounting and performance marketing as opposed to building off-platform brand equity. And I think one of the things, and this is one very, very interesting thing we look at when we look at founders when we acquire, and as I said, that we don't acquire 100%, we let the founders grow, and our job is to support them into realizing their full potential.
Sure.
We look at people who have a mindset of building to last, and not building to sell. And I think that actually makes a significant difference.
And I think for you, somebody at the helm of this, large organization, and yes, culture, ethics, being a corporate citizen have all been core values of this organization, and you embody that. But how is the experience of running a large ship like Marico, which is, I would say, defined as technically a traditional company, vis-a-vis now your attempts to work with new age founders and build your digital portfolio? And I would say this would be also a premiumization play, right? And juxtaposing both those cultures and being able to do justice to both and balance that as a leader. How is that experience? Because it's very different.
So let me tell you first, I think if you look at our history, and we have been successful by punching above our weight. So as we have scaled up, we have ensured that we maintain our, what I call, an owner's mindset, a founder's mentality, and therefore we describe ourselves as a insurgent incumbent, or a scaled insurgent rather than incumbent, and that culture is there in the organization. Having said that, we were clear at the beginning, after some attempts, that these are two entirely different business models. The mothership, as I call Marico One, if I call it, is based on a repeatable model of driving efficiency, large brands, right distribution, mass, media. So it's and yes, I mean, obviously agility, speed are important, but here it is about scale. This is about, as I talked about, high velocity innovation, passion. I mean, the tail SKUs of our core business is the hero SKUs of the digital business. Okay. Similarly, I think the capabilities required, or even people. I mean, if I look at it, large companies, you have perhaps, you don't have so much risk pay. You have a very competitive fixed pay along with some risk pay.
Yeah.
In a digital world, it is about very low fixed pay but a high risk pay, and you need a certain mindset, a risk appetite and all that. So initially, when we decided that it is important to keep these things apart. So the way we look at these digital brands is almost like an engine 2, we call it Marico 2, with a house of brands. We look at capital allocation, we look at portfolio, they can't launch anything they want, and we look at reputation and quality, compliance. These are very important.
Of course.
The rest, they are free to do. And as I said, because of our unique culture empire, we allowed to do that, and we allowed the founders to prosper because we realize they have a better right to win than us. As I said, that 0 to 100, we don't know.
Yeah, sure.
The second thing is we realize that you need a different set of people, different set of processes, different set of compensation. When we transplanted some of our own people, we realized that they are not wired for that kind of a business. Having said that, some people have been successful, but we are now recruiting a completely new set of people for that engine too. We have kept it, even we won't be at 100%, though they continue to operate out of Ahmedabad. Just Herbs operates out of Chandigarh. True Elements, of course, operates out of Thane and Pune, but not in our office. And we have deliberately kept them separate so that we continue to let them prosper. At the same time, what we have also done is, are there synergies between the all three, whether it's a common data stack, common logistics, and that will have a complete system advantage compared to a standalone startup company. For example, recently we have just started a nano manufacturing unit within our plant, because our plants were designed to actually do only large runs. Now I can do those ones for Beardo or a Just Herbs, and when you insource, you automatically get a 200 bips margin advantage. Okay, so we can deliver that. So we have done this, and I believe this is a model that actually will work.
And how long are you giving Marico to define it like that, in terms of a gestation period to become profitable companies?
So I think at least 2 of our brands will make profit in the next 12 to 24 months.
Oh wow.
So, and as I said, that is something, because of the synergies which we have. We are a house of digital brands. We are not one digital brand.
True.
And therefore, I think it is very much possible. And as I said, that we will, and that is our aspiration, that when it comes to driving sustainable, profitable growth, we should be in a top quartile in doing that. And therefore, we should be a destination strategic investor for all founders who want to realize their full potential and just not do IPO. If you don't want to do IPO, we are the people to come to.
Sure. Well, I truly hope that happens. And on that note, thank you so much, Saugata. Before I leave, I have to congratulate you once more on not only ensuring that Marico runs its own shop with such diligence and ethics, but has also been able to cross over and do these new age things and fuse it with a traditional system, plus to also continue on the path with responsibility, and hence of course many congratulations on being the corporate citizen of the year. I don't think it's possible without good leadership. So all thanks to you, and here's more power to you and Marico going forward.
Thank you.